Imagine waking up one day to find that the paper bills in your wallet have vanished overnight, replaced by digital code you barely understand. You try to pay for your morning coffee, but instead of handing over cash or swiping a card, you scan a mysterious string of numbers on your phone. The barista smiles knowingly, confirming the transaction instantly, and it hits you. This isn't just convenience. It's a glimpse into how money itself might transform entirely. This sudden shift feels like stepping into the future where traditional banks and government-issued currencies no longer hold their familiar grip. It's not science fiction anymore. It's an unfolding reality driven by cryptocurrencies, digital assets that promise to rewrite the rules of finance as we know them. Now think back 20 years. If someone had told you then that soon people would be sending money across continents in seconds without intermediaries, trusting complex algorithms more than trusted institutions, many would have laughed at such an idea. Yet here we are, standing at the crossroads where technology and economics collide with unprecedented force. The buzz around crypto is impossible to ignore. Bitcoin's meteoric rise and fall capturing headlines globally. Ethereum powering smart contracts that could automate entire industries, and thousands of altcoins competing for attention in a vast digital marketplace. But beyond this hype lies a deeper question. Will these innovations simply complement our existing financial system or overturn it completely? Will cryptocurrency dominate our wallets and economies tomorrow, or fade into obscurity? Picture yourself navigating this new world where value isn't tied to gold reserves or printed notes, but encrypted keys and decentralized ledgers maintained by countless anonymous participants worldwide. What does trust mean when there is no central authority? How do governments respond when control over money slips from their hands? And what about everyday people like you? Will these changes empower or exclude them? These aren't abstract dilemmas confined to tech enthusiasts. They affect everyone who uses money daily. As we peel back layers of history, technology, regulation, and human behavior, intertwined with crypto's evolution, one thing becomes clear. Understanding whether cryptocurrency will dominate means grasping far more than just market charts or blockchain jargon. It requires envisioning how society values exchange itself in an increasingly digital age. So let's dive deep into this fascinating journey ahead, because the future of money might be closer and stranger than you ever imagined. Imagine waking up one day to find that the cash in your wallet has become obsolete, replaced entirely by digital currencies you don't fully understand yet, somehow control nearly every transaction you make. This isn't a sci-fi movie plot. It's edging closer to reality as cryptocurrencies carve out an undeniable space in our financial world. You might be wondering if crypto will truly dominate the future of money or remain a niche curiosity for tech enthusiasts and risk-takers. Let's unpack this together with some real-world scenarios. Think about El Salvador, the first country to adopt Bitcoin as legal tender alongside its traditional currency. For many citizens there, especially those without access to conventional banking services, crypto offers a lifeline, an opportunity to participate in the global economy using just their smartphones. Remittances from abroad can be sent faster and cheaper through Bitcoin than through traditional money transfer services, which often charge high fees and take days to process payments. This practical application showcases how cryptocurrency can reshape everyday financial life for millions. On the other hand, consider what's happening in countries like China or India, where governments are wary of losing control over their economies due to decentralized currencies outside their regulatory reach. They're pushing forward with central bank digital currencies, CBTs, digital versions of their own fiat money, but backed and regulated by state authorities. Imagine having a digital wallet directly linked to your national bank that allows instant transfers without intermediaries. This could dramatically reduce costs while maintaining oversight and security. Now picture yourself using crypto, not just for buying coffee, but also investing in real estate or funding startups via decentralized finance platforms. These systems eliminate middlemen like banks or brokers by connecting borrowers directly with lenders worldwide through blockchain technology. That means lower interest rates for borrowers and better returns for investors, all managed transparently on immutable ledgers you can verify anytime. Yet volatility remains a huge hurdle. Prices soar one day, only to crash unpredictably the next, making daily use risky unless major stability mechanisms evolve. Regulatory uncertainties add another layer of complexity as governments grapple with balancing innovation against protecting consumers and preventing illicit activity. Still, your very engagement right now reflects growing curiosity about whether this new form of money will become dominant, and maybe even inevitable, as society embraces increasingly digital lifestyles where trust is coded into technology itself rather than institutions alone. So while no one can say definitively that crypto will rule the monetary landscape tomorrow, these examples show it's far beyond mere speculation. It's actively reshaping how people exchange value today around the world. And perhaps soon everywhere you go too. Imagine walking into your favorite coffee shop and paying for your latte not with cash or a card, but seamlessly through a cryptocurrency wallet on your phone. This isn't some distant sci-fi scenario. It's happening right now in cities like San Francisco and Tokyo, where merchants accept Bitcoin and Ethereum daily. The convenience is compelling. Instant transactions without intermediaries, lower fees, and cross-border ease that traditional banking struggles to match. Take El Salvador, for instance. It recently adopted Bitcoin as legal tender alongside the US dollar. This bold move has sparked debate worldwide, but also showcased practical benefits. Remittances from abroad arrive faster and cheaper, helping families access funds without losing chunks to transfer fees. For people who have been underserved by conventional financial systems, crypto offers unprecedented inclusion. But about stability? Critics argue cryptocurrencies are too volatile to replace stable currencies fully. That's where innovations like stablecoins come in. Digital assets pegged to real-world currencies such as the US dollar provide the best of both worlds. Blockchain efficiency with price predictability. Companies like Tether and Circle are already facilitating billions of dollars in transactions globally using these tokens. Look at supply chains too. Blockchain-based payment solutions streamline international trade by reducing paperwork delays while ensuring transparency at every step. Maersk uses blockchain technology combined with digital currency settlements to speed up container shipping payments across continents, cutting costs and boosting trust among partners. Even central banks aren't sitting idle. Many are exploring central bank digital currencies, CBTs, that blend government-backed reliability with digital convenience. China's digital yuan pilot program is among the most advanced examples, allowing citizens to conduct everyday purchases digitally while authorities retain control over monetary policy. A hybrid approach signaling how crypto principles might integrate into mainstream finance rather than outright displace it. While challenges remain, not least regulatory uncertainty and environmental concerns, the momentum behind cryptocurrency adoption signals more than just hype. It points toward an evolving future where money becomes borderless, frictionless, and democratized. Whether you're sending money overseas or buying a coffee down the street soon enough, chances high you'll be interacting with this new form of value exchange one way or another. The question is no longer if crypto will dominate, but how quickly and in what shape that dominance unfolds before our eyes. Imagine waking up one day and realizing that your paycheck isn't just a number in a bank account, but tokens you can instantly use anywhere, from buying your morning coffee to investing in a startup halfway across the globe. This is not some far-off fantasy. It's already happening. In countries like El Salvador, Bitcoin is legal tender, meaning people pay taxes and shop with crypto daily. That bold move has sparked debates worldwide about the practicality of cryptocurrencies as everyday money. Think about the unbanked populations, over 1.7 billion adults, without access to traditional banking services. Crypto offers them an entry point into the global economy without needing a physical bank branch or mountains of paperwork. Mobile wallets powered by blockchain technology provide secure, low-cost ways for people to save, borrow, and transact, even if they live miles from the nearest city. On the corporate front, giants like Tesla have flirted with accepting Bitcoin for their products, signaling growing corporate acceptance despite volatility concerns. Meanwhile, decentralized finance, or DeFi, is rewriting how we think about loans and investments. Instead of going through banks or brokers who charge hefty fees and enforce strict rules, people are turning directly to code-powered platforms where trust is algorithmic rather than personal. Yet this future isn't without challenges that shape its pace and fall. Regulatory uncertainty remains a shadow hanging over crypto's potential dominance. Governments are wrestling with how to protect consumers while fostering innovation. Central banks around the world are exploring digital currencies of their own. CBDC. That blends state control with digital convenience. Picture this. Instead of carrying cash or cards, you scan a QR code on your phone that triggers an instant transaction verified by thousands of computers globally within seconds. No middlemen taking cuts or slowing things down. That's faster payments, greater transparency, reduced fraud risk, all baked into one seamless experience. Will every country leap into full crypto adoption tomorrow? Probably not. But infrastructure improves and cultural resistance softens, especially among younger generations. The shape of money will undeniably shift toward these new models faster than many expect. So when you ask yourself whether crypto will dominate, the real question might be, how ready are you to step into this evolving landscape where value moves at lightning speed through lines of code instead of paper bills? Because sooner than later, everyone will be interacting with money different. Imagine a world where the way you think about money transforms completely, not just in how you pay for your morning coffee, but in how you save, invest, and even understand value itself. This isn't some distant sci-fi fantasy. It's unfolding right now as cryptocurrencies and blockchain technology ripple through every corner of our financial landscape. The question isn't just whether crypto will dominate, it's how deeply it will weave itself into the fabric of your daily life, and what that means for your control over wealth. You see, unlike traditional currencies controlled by governments and banks that often feel distant or rigid, cryptocurrencies promise something radically different: decentralization. This means no single entity holds all the power over your money. Instead, transactions are transparent yet secure, fast yet immutable. Imagine sending funds across continents in seconds without hefty fees, or waiting days for approvals. This is not a future possibility. It is already happening in pockets around the globe. But with great innovation comes uncertainty. You might wonder if this new digital currency is stable enough to trust, or if complex technology could leave people behind. That skepticism is healthy, because it pushes us to demand better security measures, clearer regulations, and broader education on these technologies. The path forward requires balance, a harmony between innovation and responsibility, to ensure everyone can participate meaningfully without fear or confusion. What's most exciting is how this evolution empowers you personally. Crypto doesn't just change transactions. It introduces new financial models like decentralized finance, DeFi, enabling you to lend, borrow, earn interest, or even create assets without intermediaries taking their cut. It opens doors to global markets previously inaccessible due to geography or bureaucracy. Suddenly, managing money becomes less about navigating systems designed decades ago, and more about leveraging tools tailored for today's interconnected world. So, when thinking about tomorrow's money system dominated by crypto, or perhaps a hybrid model blending old with new, consider what matters most: control, accessibility, transparency, and empowerment. This isn't merely about digital coins replacing paper bills. It's about reimagining trust itself within our economies at an individual level. As these changes accelerate around you at lightning speed through lines of code instead of paper bills. And as more people wake up to this paradigm shift, you're part of a historic moment shaping not only financial systems, but also how societies function globally. The future won't wait patiently. It arrives relentlessly with opportunities wrapped in challenges. And those who embrace this transformation thoughtfully stand poised not just to witness history, but to write its next chapter themselves. Your relationship with money is evolving. Will you let crypto define that evolution?